Hey YouTube, welcome to the Beginner Investor channel. The purpose of this channel is to provide short, to-the-point videos for new investors. Your time is valuable, and as a new investor myself, I found YouTube is full of 15, 20, 25, even 30-minute videos about beginner investing and for new investors that were, frankly, mostly full of fluff. So I want to get straight into it. Disclaimer, I am not a financial advisor. This is not financial advice. These are my actual beginner mistakes that I made when I first got into the market not that long ago. I am still a beginner myself, so learn with me, watch what I do, don't make my mistakes. Mistake number one, chasing a runner. This means going after a stock that is on an absolute green tear and trying to get in on it so that you can join the fun. You can make some money too. You'll see this price action chart on the far right there. There's a green candle bar. If anybody got in this thing at $41, $42, $43, they're sitting pretty now at 51 as this thing rises. If you jump into this at 49, 50, 51, you are playing with fire. It's very hard to determine where a stock is going to hit the top and then go back down. Most runners like this seem to happen first thing in the morning at market open, or sometimes in the afternoon if a big news catalyst has come out. If you're not in a runner early, avoid the temptation to jump into it. I did this too many times early on, and I got caught holding at the top as the stock went back down, and now I'm holding a share that's overvalued. I thought when I first got into the market that green is good and red is bad. Well, I quickly realized that I like the opposite. I want to find a company that I believe in, and I want to try and buy red and then sell it green. Mistake number two, panic selling. Early on, if I had a stock that would go red, I would immediately think, okay, well, I need to sell this. I didn't realize how much movement there would be in the price action on any given day. If you believe in a company and you're holding it long term, you need to avoid panic selling. There will be green days, there will be red days. If you're convinced of long-term results, you need to just hold and see it through. If you're not convinced and maybe you're trying to swing trade or it's just something where you're trying to make some money and it's not working out for you, then consider a stop loss. It's a stop loss. This is an example of a Fidelity trades green. So the symbol is, what's the ticker symbol? The action is buy or sell. So we're going to say sell here. Quantity, you can pick however many shares you want to sell, or you can say sell all shares. And then stop loss. This is basically saying, hey, Fidelity, please try and sell my shares at this stop price. So let's say you got into a company at $50 and you're watching it during the day and it's dropping 47, then it gets to 46, and you're saying, well, if this thing goes below 42, it's not the value that I'm looking for anymore. So you would set your stop price at $42, and so Fidelity will attempt to sell your shares at $42 if it continues to drop. Nice way to avoid, checking back in maybe later in the week or the next day and finding that the stock that you had gotten in at 50 is now down at 30. If you set the stop loss at 42, you get out at 42 if they can execute the trade. Mistake number three, too much information. I signed up for all kinds of stuff. I didn't pay for anything, but I thought I'll just bombard myself with free information and this will help me. It was not helpful. It's way too much. It's too overwhelming. My suggestion is to just start simple and stay simple until you have a really good feel for things. Yahoo Finance or Google Finance, and just see what's trending. That they'll show you some of the news stories. You can see top gainers, top losers. You can see the most active. Stick with one or two really simple things to start off with. Mistake four, investing for huge, immediate gains. Swinging for the fences. I've come across this saying on numerous occasions in my research. Time in the market beats trying to time the market. In my first 3 weeks, there were several opportunities, or I would see several YouTube comments of people swinging for the fences, just going all in on a stock. I'm trying to make 10x right now. This is a marathon, not a sprint. I've found that there is 252 or 253 trading days a year. Seems to be some discrepancy. If I can try to average $25 a day, maybe by swing trading, or maybe my portfolio averages going up $25 a day over the course of a month, that would give me $6,325 a year. Over 30 years, that gives me $189,750. That's a great chunk of change for me, and it's a measurable goal. It's a reasonable goal for me to try to attain. Mistake number 5. Investing in too many stocks. On the right-hand side there, you will see a list of all the stocks that I was in after 3 weeks. And I had already sold 7 or 8 other stocks. So in 3 weeks, I had been in and out of almost 30 stocks. This is directly related to mistake number 3, was it? Mistake number 3, too much information. Okay, and that includes YouTube. I found myself subscribed to probably 10 to 15 YouTubers who were telling me about different stocks that they liked, and I was just jumping into all these plays, and I found myself in way too many positions. It's too much. Please find a handful of stocks that you like, companies that you believe in, growth that you think is going to happen, and just ride those out. Watch them, learn. Do not get into this many stocks like I did. It's too much to manage. Mistake number 6, practice first. This is something I didn't do because I didn't know this existed. I have a Fidelity account and I have a Webull account, and I found this on Webull. It's called paper trading, and it is exactly like real trading except with fake money. So you learn, you can sort of get your feet wet before you start trading with real money. And wow, I wish I knew about this. I did not even know how to buy or sell when I first opened my account, and I had to figure that out kind of on the fly. And buying and selling in the market, you really want to, when you get a chance to buy something at a certain price, it's constantly moving. The price is constantly fluctuating. So there was a lot of pressure on me to buy at a certain price or sell at a certain price, and then I found myself unable to because I didn't know what I was doing yet. If you can paper trade for a day or two just to learn the basics, do it. Do it, do it, do it. So valuable. I wish I knew about it. Mistake number 7, keep some investing cash in reserve. This was a big mistake for me. About 3 weeks into my investing journey, the market had several red days in a row, almost a full week of red, and companies that I loved had dropped in value significantly, and I wish I could have gotten into them, added to my position, averaged down, which is say, let's say I got into a stock at 60 and it's dropped to 40. Well, if I get into it at 40 again at the same amount of shares I did at 60, now my average price is 50. So I've brought my average down from 60 to 50, which is great if you think it's going to go back up over time. I didn't have anything in reserve, and so a bunch of stocks that I really believed in went down, and I was unable to add to my position, which was a big mistake. Think of it like a swimming pool. I've got 3 young kids at home. When you're first learning to swim, you just get wide-eyed at the people playing in the deep end or going down the big slides, having fun way out in the pool, and you're just trying to get your feet wet. Take it slow, take it easy. This is real money that you're investing. You have plenty of time. You need to learn the basics first. Do not jump in and go with the all-in day traders who are swinging, 2,000 shares here, 4,000 shares here. Take it easy. Please take it easy. If this was helpful, please consider subscribing. I'm going to be putting out several videos about beginner investor topics, things that I wish I knew, mistakes that I had made, tips that I have for beginners. Down below you'll see a link for Webull, which I highly recommend for brokerage accounts. I have loved the Webull app and the desktop app. If you click the link below, I will get free stocks if you open an account and put $100 into it. and you will also get free stocks for opening that account. So it's sort of a win-win for both of us, and Webull is the one that I definitely recommend. Thanks for checking out Beginner Investor. We're trying to ease our way into investing. Please leave a comment below. Please leave a like. Have a great day.